GameStop and Nvidia, two of the most actively traded stocks in the market right now, but very different stocks for obvious reasons. Now this week I want to talk about the similarities and differences and some important mistakes to avoid when trading or investing in these stocks. Plus I'll do my normal market analysis, give you a sense of where the market is going. We've got an important chart to look at this week. And finally, we'll look at the trade of the week. That's all coming up in this week's Stockscores Market Minutes. All right, so GameStop and Nvidia. As I said at the intro, these are two very actively traded stocks, attracting a large crowd of investors, get a lot of following and action in social media, on different chat groups and that sort of thing. They're two very different stocks. One is a great stock for investing, and one is a great stock for trading. But even though they have those big differences, there's actually some important lessons that both of these stocks teach, and they're things that you must understand when you are trading or investing in the stock market. So I'm going to show how they're very different, but also the concepts that can be seen in Nvidia's trading, but also in GameStop's trading. So let's dive right in and take first a look at Nvidia. And here is the chart. And this is a 3-year weekly chart. You can see that the trend is up. It's been up for some time. These things are all obvious. But what may not be so obvious is that this is what we call a parabolic trend. If I was to draw a line across the bottoms, as I've done on the charts that you see on screen, you can see that that line is getting steeper and steeper. When trend lines get steeper like this, it's called a parabolic trend. And it's usually a sign that investors are quite emotional, that they're chasing the stock higher, and it's often dangerous to invest in these stocks when they go parabolic. So anytime a stock goes parabolic like this, you have to be concerned about risk. Now I'm going to show you the exact same thing in GameStop, except on a much shorter time frame. And this emphasizes something very important about trading. These concepts that I talk about, trend lines, overbought, oversold, emotional trading, all things I'll show you in a minute. These concepts apply in the very long term, like we see with Nvidia, or in the very short term, like I'm now going to show you with GameStop. So here is, again, the Nvidia chart, and you can see this curving trend. That is called a parabolic upward trend, and it is a sign that investors are emotional and perhaps a little bit irrational. Now, I want to emphasize there's no reason to sell Nvidia yet. I'll tell you what to look for when to sell Nvidia in just a minute. But let's dive into GameStop now and GME. Now you can see a very different looking chart. Now remember, this is a weekly chart, and you really just have a very short-term move here over the last 6 or 8 weeks, moving from around $10 to as much as 65. In fact, in the aftermarket, it traded over $70 on one of those weeks. But now let me show you where there's a similarity. If we dive into the short-term chart, and we'll make this an hourly, what you'll see is that parabolic trend building here again. So it's linear, and it gets steeper, and it curves, and then it breaks that parabolic upward trend. It did it here as well. Linear, and then getting steeper and steeper, and then it broke the parabolic trend, and it went lower, just as it went lower that time. So that's an important lesson for holders of Nvidia, because the trend on the weekly time frame has gone parabolic. Now, it doesn't mean it's going to go down next week or next month, or could be many months. But what to watch for a sell signal on Nvidia is a break of that parabolic trend line. Now, anytime a trend goes parabolic, what I'd like to do is monitor the chart on a shorter term time frame. So what do I mean by that? Well, if we are looking at Nvidia on the weekly time frame, that's what this is here, I can switch it to a daily time frame. I'm just going to go to the Stockscores.com charts, click on 1 year, make it daily. And now you can see a little bit better how that trend line has been building. So if we break this trend line in the near term, it's likely going to pull back to the linear trend line. Now you may say, I love NVIDIA. It's a stock I want to hold forever. I never want to get out of it. Fair enough. But wouldn't it be good to sell it at a win and then buy it on the pullback so you can get more shares? In other words, if you could sell NVIDIA there at 120, 125 on a break of trend and then buy it back around 100, you could buy 20% more shares with the capital you have. Now there's tax effects and you need to understand those as well. Obviously, if you sell it, there's a taxable event and therefore it may not be right for everyone, but it is something to consider. Now let's go back to the GameStop chart and let me show you how to know when to buy and sell these very volatile stocks. So I'm going to dive into the 1 month chart. We'll make it a 30-minute this time. And what I love to do is either trade breaks from low volatility, which happened here and here, or trade pullback breaks in an upward trend. So there's one of those right here. And there's also one right here. Actually, that's not an upward trend, so we'll cancel that one. Let's go with this one. Okay, so here we have a stock trading in what's called an ascending triangle pattern. It's low volatility and it broke out. Now, what are my main beliefs about trading, and something I've learned the hard way from doing this for over 30 years, is that as soon as you start listening to people, you fall in love with stocks, you get sucked into stories, and you don't sell when you should sell. I don't care what people say about the companies they own. What I'm mostly concerned about is what are people doing with their money? You see, the stock market isn't fair. There's always going to be some investors that have better information than others. And when they have that better information, they will jump into the market and tell us what to do. Those of us like me who don't have great information necessarily can just follow market action and look for evidence that there's aggressive buying caused by those traders that have good information. And GameStop is a great example of this. So let's go back to the chart. Back here, when the stock started to break out on end of May 9th, that was shortly before the roaring kitty, Keith Gill, who's the spiritual leader of GameStop traders, the apes. That's when people started to accumulate, and soon after he announced that he was going to be doing a live stream, a big event that had all of the bulls on this stock very motivated. And that's what started the move. Now we saw that again, another move here, a break of a pullback, as investors started to think about, the expiration of the options. I'm not going to go into the story. I've done other videos on GameStop. You can watch those other videos on my Stockscores YouTube channel. So the point is, if you listen to the news, if you listen to the words, you're usually getting in way too late. You want to get in when the market starts to move before there is a lot of knowledge out there. So when Roaring Kitty takes a position and he announces it, he puts something on Twitter showing his position, okay, that gets people excited. Then he announces he's going to do a live stream, and that gets people excited. Don't wait for the news, because if you do, you're a dinosaur. You're coming in too late. I always just follow market action. And so what I like to do, as I said, is buy the breaks from low volatility, like that. By low volatility, I mean sideways, boring trading, and then breaking out. Up it goes. Then when the upward trend, the parabolic upward trend is broken, get out. When it starts to build rising bottoms, that's a sign of optimism, and then buy the next break. And then there's a pullback. Buy the break of the pullback. Don't chase strength. Don't chase stocks when they run away from their trend line. If I draw a trend line, again, this is a very short-term chart, but I draw that trend line here. I want to buy it when it pulls back to the trend line, not when it runs away. But human emotion is highest when it runs away. That's when everybody's a bull. That's when everyone has very exciting things to say about the stock. And when you chase emotion, you get sucked in, and that can cause big losses. And this brings me back to NVIDIA. So let's jump back to that 3-year weekly chart of NVIDIA. And although I think it's a great company, although it has a great bullish trend, what you can see is that the trend has gone parabolic. And therefore, it is likely that it will soon break down on some profit taking and give an opportunity for buyers, but also present a losing trade for people that are buying an emotional market. When trend or when price runs away from the trend line, when it's high above, it's very risky. And you can do that in the very short term, like we've seen in GameStop's trading over the last little while, or in the very long term, like NVIDIA. No sell signal on NVIDIA yet. We had a little pullback back here the last time it went parabolic, and it pulled back for 3 or 4 weeks, and then it resumed. It's probably going to pull back again soon, and that'll be your opportunity to buy. Buy strong stocks when they go on sale. All right, well, let's get into this week's normal market analysis. And an important week, we had a Fed decision this week, which didn't see a drop in interest rates. And I think that disappointed the market, although the bond market predicted that there would be no drop in rates. The bond market's predicting maybe a drop in rates as early as July, but that's not likely. Probably more likely September, October is when the market expects rates will drop. But I'm going to show you a very important chart in just a moment that predicts that maybe it'll come sooner than later. Let's take a look at the S&P chart first. Let's jump back into the Stockscores website, SPY. There is my weekly chart, and you can see a little bit of a parabolic nature. It's gotten steeper. It's not going crazy to the upside yet, but it is still a little bit risky. But as long as that trend is up, we have to call that a bullish market. And if I look at the short term, there I can see that the market is in a general upward sloping channel and looks relatively healthy. On the NASDAQ, let's dive into that one, QQQ. Again, upward trend, starting to run away from its trend line a little bit. That's about the trend line there. And you can see that the market is at the top or approaching the top of the channel. So typically when it gets up there, that's going to lead to some profit taking. And so I think we may see some profit taking in the large cap tech stocks, which are what's lifting these indexes higher. It's not most stocks. Most stocks are not doing this. It's Apple, NVIDIA, Microsoft. Those companies are really what's driving these indexes to new highs. Most stocks are not all that strong. And let me show you the Russell 2000, which is a broader market index of small cap stocks. Look at the difference. Those small cap stocks are not keeping pace with the large cap stocks. And so here we've got generally a kind of a sideways market and not a lot of activity. The reason is small cap stocks are much more susceptible to higher interest rates. And so the future for interest rates is a very important element for the market. And again, I'm going to show you a chart in just a minute that shows how that might soon change. But first, let's take a look at the Canadian market, T.XIU, more commodity based in Canada. We had a good rally here on mining stocks moving higher, but that has lost some steam here. The upward trend line has been broken. And so that's quite negative for this market. It points to maybe some short-term weakness on the way. When we dive into the commodity charts like gold, what we'll see is a parabolic upward trend. So here is the linear trend line, and it got really quite steep, and now it's breaking down a little bit. I think gold may pull back a little bit more. Longer term trend is still pretty good, but it is a bit overextended. If we look at the short term chart, you can see that that started. We've had some pessimism building over the last couple of weeks. We're in this little downward sloping channel. So in the short term, be cautious with gold stocks, but the long term, we may have a buying opportunity soon if it comes back enough. Now, the oil market has been pretty much sideways for a year and a half or so, and it's building what we call an ascending triangle. And so it likely will eventually break out to the upside, but it's going to take some time. Now, it had a good week this week. We moved up this week, and if we look at the 1 month chart, you can see the comeback, but we're still basically in a sideways trending market in the short term and also in the long term, basically sideways. So maybe it's a good hold, certain stocks, but not a lot of excitement there. Let's take a look at the US dollar, and then we'll look at Bitcoin. And the US dollar in the short term, a lot of volatility. And this is around, first we had a weak CPI number, which made investors think that the US Fed would lower rates. Well, that didn't happen. They didn't lower rates. So then the stock market moved backwards or moved down, particularly the IWM, and the US dollar recovered again. So we see that recovery here at the end of the week. A lot of choppy trading in the US dollar. It's generally positive, but volatile. How about Bitcoin? I know a lot of you like this, and look at the parabolic trend. So I talked about this at the top of the video. There's your parabolic trend, and it's gotten steeper and steeper. This is called a bursting bubble. It's my name for a market that goes parabolic, hits new highs, and closes below the open. And that's set up for this pullback that is underway. Now, how far will it pull back? Well, it's coming to its first trend line right now, so it could get some support off of that. But if it fails to hold this, it may pull back a lot farther. I don't think that's likely to happen, but it's certainly a risk. And so you want to be watchful of this chart in the next few weeks. Now, if we dive into the 1 month chart, you can see a little bit of weakness building. See these falling tops? That's a sign of pessimism. And then we have a floor here, and we've broken below the floor on Friday. So that points to a possible downward move in Bitcoin in the next little while. Now, the final chart, and I would say the most important one this week, is the US Treasury Bond Index chart, or ETF. Here we have a downward trend line that has finally been broken. This downward trend has been underway since 2020, really, as interest rates started to rise in early 2021, started to rise. That has sent the bond market down, which meant interest rates have gone up because, of course, there's an inverse relationship there. Bond market goes down, that means interest rates are going higher. Well, last week, the bond market went up. That meant interest rates went down in the bond market. And that also happened on the break of a downward trend line from a rising bottom. So when you build a rising bottom like this and break a downward trend line, that indicates that this is likely to go higher. Maybe not next week, but in the weeks and months ahead, it does appear likely that the bond market is going to go up, and that means interest rates will fall, and that will be supportive for those small cap stocks. And you may see money move out of those large cap tech stocks and flow into the broader market, which has largely been left behind in the rally. All right, so let's look at my ratings then for the week. Bullish on both time frames for US large cap and NASDAQ. Small cap, I've got short-term bearish, long-term neutral. The same for Canadian stocks and the same for gold. Oil, US dollar, Bitcoin, I'm neutral on both time frames. And then on bonds, I've upped my rating to bullish in the short term and neutral in the long term. It does look like the bond market is starting to turn around, and that's positive for the broader market of stocks. All right, let's look at the day trade of the week, or in this case, it's a swing trade. What we look for always is abnormal activity breaking from low volatility. I talked about that at the top of the video. It's a sign that investors are excited about something. And I do this all day long, looking for stocks that are coming alive with this abnormal activity, that are surprising the market. And then it's either by the break from low volatility or by the pullbacks. And so looking at this stock, you can see that there was some real abnormal activity right there on June 12th. Prior to that, nobody cared about this stock. Look at the volume, boring. And then here the volume picks up. So that tells us that there's something happening. That happened middle of the day on this stock on the 12th. And it was a signal that something was happening. It was the people that know this company the best that started to buy aggressively. I don't know anything about this company. To me, it's just a four-letter symbol. LGVN, no idea what they do, couldn't care less. What I know, though, is that the people that know the most, buying aggressively, and they create the abnormal activity that I can find using some indicators I developed called an action candle. That's what these little pink dots are here. So that's opportunity number one. You never want to chase it when it runs away. You want to wait for the pullback and buy the break of the pullback. And so that was opportunity number two. And then it runs away and it pulls back and it broke the pullback. And that had a little gain, but as we get higher into the upward trend, it starts to get a little long. So opportunity number one, that was the best. Opportunity number two, that was the second best. And then three here, that was okay, but not great because it was already up a lot. Still, this one, if you bought there, it's still a hold because right at the end of the week here, we broke the pullback again. And that may point to some more action coming in this stock next week. Well, I hope that you've enjoyed this week's Market Minutes. Do me a favor, click the like button, subscribe to the channel, leave a comment. What do you prefer, GameStop or NVIDIA? Two very different stocks. I know there's fans of both, so I'd love to hear your thoughts on GameStop and NVIDIA. They have some big things coming up in GameStop this coming week. I'll do another video on that, and you'll see it on the Stockscores YouTube channel as well. Hope you've enjoyed it, and trade well.